Topsy-turvy Thursday for your money. Wild market swings on Wall Street. She's down, she's up, she's down, she's up. Many investors left with their heads spinning. Falling yields, China headlines, consumer data, all driving big moves. So how should investors navigate all of the volatility? Guy, I'm going to start with you. It's been a week where we began with 10% tariffs coming in, market goes down. The president then says, well, I'm going to postpone for some. Market goes up. Yesterday, yield curve goes negative. Today, back up.
First of all, great to have you on board.
Nice to be back.
And what's the cheapest thing you can do? Pay attention, right, Pete?
Darn right.
Cheapest thing you can do, Tyler. Now, you weren't here a week or so ago, but Pedro was sitting over there on the hook, and he said something that resonated with me here over, and he said, you're going to see volatility within volatility. And I sort of scratched my head, but it makes sense, and you saw it today. I mean, market's up 100 points, big deal. Well, probably had an 800 points up, down during the day. There was huge swings. To answer your question, if you don't like it, well, that's a problem because I think volatility is here to stay for the foreseeable future. The VIX closed at 22. I think it's going to push towards 30. That's where it's crescendoed the last two times the market has bottomed out. And I think you're going to continue to see it. I think what's going to happen over the next couple of weeks is you're going to have these sideways moves that trend lower. And that's where we're headed, in my opinion.
I get the idea, Karen, that if you are a trader and you like volatility because you can identify certain things that might give you a target of opportunity and move in, that's one thing. But if you're a long-term investor, following headlines, watching the tweets, and every little twitch and twitter of the market, that can be a dangerous thing to do, right?
No doubt. It's a recipe for disaster. I mean, the idea that you're going to be able to come in at the bottom and buy, right? And then you're going to know when the market's topped out and you're going to sell. And you're going to do that really efficiently over and over. That's just not possible. So if you know, I mean, you know, there's Pete, who's on the one end of the spectrum you talked about, just trading all the time. I'm very much a long-term investor. So I generally like these pretty volatile markets when stocks trade down in integers because that tells me something else is going on.
You can get a bargain.
Lately, I've been very concerned that it's worse than just some movement in the market.
What tells you that?
I think that the bond move today, that concerns me. I don't know why that happened. To me, though, the biggest thing is the tariff uncertainty. It creates uncertainty, which causes people to, not consumers yet, but CEOs to pull back, and that, I think, causes spending to decline, and that ends up being a bad thing.
Pete, how have you been playing the volatility within the volatility? Right. What have you been doing this week?
Well, I think you do use opportunities. Karen mentioned some of what I do, some of the trading, but some of that trading actually is even for long term. So I'll give you a great example. When we see these big pushes to the downside and we see this volatility that absolutely skyrockets, August 1st, we were 1380. By August 5th, we were over 24. Now we're trading at 22 on the volatility index. Today, they bought 150,000 VIX calls going out into August at the 26th strike. So volatility looks like it wants to hang around, to your point, Guy, and volatility within volatility is volatility. I mean, it's just crazy. So there are opportunities. You sell off on a stock that I think has a better value than where it's sold down to. But if I'm buying that stock and now I've got an implied volatility that gives me room to be able to sell a call that normally trades at $1 or $2, that's now trading maybe close to double that, if you look at what's happened with the VIX, then it gives you a little more protection to the downside. It also gives you that much more room to the upside if you're buying stocks and selling calls against it. So I think there are great opportunities out there, Tyler. And matter of fact, volumes have been absolutely outrageous in August. We're 5 million per day over the average for year to date in terms of options volume right now. So
it's August.
Yeah, and it's been August, which everybody says, hey, you know, everybody's on vacation, everybody's this and that.
Stuff happens in August, though.
Yes,
every year.
And it's been very, very volatile, but it's something interesting.
This August, we've had 3 of the biggest percentage moves, daily moves, in just the last couple weeks of the whole entire year. And I think that what's really interesting to think about, you know, in Q4, we got very used to 2-3% moves in the major averages intraday. You know, listen, that was a little different of a situation. I think it's kind of what you're talking about, Karen. You were kind of probably a little nervous last November for a lot of the same reasons. Here now, a lot of those reasons are coming up again. And I'll just mention this, that over the last year and a half or so, we've had 3 incremental new highs from the January 2018 high, but we've had some quick pullbacks. We've had 2 7% ones, 1 12%, and a 20% in Q4 of 2018. If you're an investor, that gives you opportunities to leg into some of your best positions. If it also happens right after earnings season where we get a lot of single stock gaps, it gives you the opportunity. I'll just give you a couple good examples in the last couple weeks. Google, Alphabet, a name that you own, it had this 10% gap last month after earnings, right? And then it came in and filled the entire gap. And if you liked that back then, and you were long it then, and you liked it when it was up 10% after earnings, and now it's filled in the gap, then you should like it just as much right here, unless something fundamentally has changed. And it gives you the opportunity to kind of dollar cost average into positions. And that is the one thing that this market has given you over the last 19 months for things that you really like to kind of reload on pullback.
Hey, by the way, Tyler, I'll just add one more thing to this conversation. You said how much of a move we had today. We had as big a move in the pre-market. Before we opened, we moved over 800 points. If you add, we were up, we were down, we came back up again, we pulled back. I mean, the moves just in the pre-market, that was 800 points worth of movement before the day started.
Yeah.
I mean, it gives you a little idea, Tyler, something we talk about all the time. Algorithms, whether it's the upside or the downside, we are seeing computers absolutely driving the market right now. Absolutely, they do.
Before I turn back to Guy, what have you been doing with your unease?
Well, I haven't. Usually I buy into markets like this. I haven't. I'm always long protection. I've been scared but selling it because I do think, I hear you, volatility absolutely could go higher, but these are the kind of markets that you buy protection for.
Yes.
So 2.5 weeks ago, 3 weeks ago, the VIX was 12 and change. You could buy puts there. And now at 20, it hit 20, close to 24 the other day, 22, 3 yesterday. You have to sell.